Please remember, the crypto market is highly volatile. This video is for informational and entertainment purposes only, and does not constitute financial advice. Always do your own research before investing and never invest more than you can afford to lose. The air in the crypto market is thick with fear. A chilling silence has fallen, broken only by the whispers of liquidation. And right now, one altcoin, a project once hailed as a titan of real-world adoption, finds itself teetering on the edge of a cliff. I'm talking about VeChain VT. For weeks we've watched it fight, clawing to hold onto a critical psychological level, but the forces against it are immense. The market is bleeding and VeChain is caught in the crossfire. The question isn't if it's struggling, but can it possibly hold on? Or are we about to witness a catastrophic breakdown that sends VT spiraling into the abyss? Stay tuned, because the answer could change everything for your portfolio. Alright, my fellow crypto explorers, let's cut through the noise and get straight to the heart of the matter. VeChain, or VT as you know it, has been battling fiercely around a crucial price point, that 2.2 cent psychological level. For context, as I'm recording this, VT is showing a concerning drop, down roughly 1.4% over the last 7 days. And if you zoom in on just the daily charts, that drop accelerates to a hefty 5.72%. Now I know some of you might be thinking, hey, a few percent here and there is normal in crypto, right? And yes, you're not wrong. But when you couple that with the fact that VET has already shed a staggering 22% of its value just this month, and its 24-hour trading volume has plummeted by 5%, it paints a very different, much more alarming picture. This isn't just a minor dip, this is sustained downward pressure. We're seeing a significant market capitalization of $1.87 billion for VET right now. It's currently trailing just behind Polygon, also known as Matic, which sits at about $1.99 billion. That's a tight race for market cap, and in a bear market, every billion counts. Losing ground here means more than just a number. It means a shift in investor confidence, a reevaluation of its standing in the broader crypto landscape. So, what's driving this downward spiral? It's not just general market malaise, though that certainly plays a huge role. We're seeing confirmation of this bearish trend across multiple technical indicators. I'm talking about the MACD, the moving average convergence divergence, and its signal lines. They are unequivocally screaming bearish. And the relative strength index, or RSI, is painting a similar grim picture. It's hovering in that uneasy zone between oversold and the middle line, showing very little buying strength. When these key momentum indicators align like this, it's not something to ignore. It suggests that the sellers are firmly in control, and the buyers, despite their best efforts, are simply being overwhelmed. But wait, it gets even more interesting and frankly more concerning when we look at the derivatives market. This is where the big money often plays, where futures and options contracts can amplify market sentiment. What we're seeing there is a subtle but significant 0.04% increase in open interest to $62.36 million. Now, an increase in open interest can sometimes signal new money coming in, but in this context, coupled with the price action, it tells a different story. It suggests an accumulation of positions, often on the short side, betting against VeChain. And here's the kicker. The data shows that a massive $76,390 in long positions have been liquidated. That's people who bet on VET going up getting absolutely crushed. While, comparatively, only a meager $2,000 in short positions were liquidated. What does this tell us? In no uncertain terms, it implies that bearish sentiments absolutely dominate the derivative market right now. The bears are winning, and they are winning convincingly. This isn't just about price, it's about the very psychology of the market. When long positions are getting wiped out at this rate, it creates a cascade effect, adding more selling pressure to an already fragile market. It's a feedback loop of fear, and VeChain is squarely in its grasp. So where does this leave us? Analysts are bracing for impact. The consensus right now is that unless something drastic shifts, a continued decline could see VET plummeting to $0.017. Think about that for a second. That's another significant leg down from current levels, potentially testing multi-year lows. The question isn't just if it will fall, but how fast and how hard. Are we about to see a complete capitulation, or is there a hidden force, a catalyst lurking in the shadows that could turn the tide? Now don't despair just yet, my friends, because as any seasoned crypto analyst will tell you, trends can and do change overnight. We've seen it countless times in this wild market. And when it comes to VeChain, there are always two sides to the coin. While the short-term indicators scream caution, the long-term vision, the fundamentals, tell a different story. A story of potential, of resurgence. Let's talk about the glimmer of hope. According to analysts, a decisive move, a strong push above that critical $0.022 level, could ignite a significant rally. If VT can reclaim that ground, it could very well springboard to $0.031. That's a huge psychological and technical win, showing a clear shift in momentum. And speaking of analysts, let's bring in one of the most consistent voices when it comes to VeChain Egrag Crypto. You've heard me talk about him before. He's been a steadfast bull on VET, and for good reason. He firmly believes that, in the long run, this asset has the potential to hit a jaw-dropping $1. Think about that for a second. From fractions of a cent to $1, he's theorized that VET is entering the third wave of the Elliott Wave structure, a powerful impulsive wave that typically sees massive price appreciation. To validate this monumental estimation, he's highlighted that VT first needs to decisively secure the $0.10 level. Egrag isn't just pulling numbers out of thin air. He's applied what he calls a cloning technique to previous market cycles, looking at how VT behaved in the past to predict future movements. He sees a triple bottom pattern forming, indicating a potential surge to $0.115. This isn't just wishful thinking, it's pattern recognition from an experienced eye. But Egrag's predictions don't stop there. He's even projected that VT could continue its explosive run all the way to $2.50. Now, if that doesn't get your crypto blood pumping, I don't know what will. What could fuel such an incredible run, you ask? It all comes back to VeChain's incredible real-world utility. This isn't just another meme coin. VeChain is making serious waves in the real-world assets sector. They are literally bridging the gap between tangible physical assets and the blockchain. We're talking about supply chain transparency, product authenticity, carbon footprint tracking, real tangible problems being solved by blockchain technology. In fact, VeChain has even earned a spot among the top 5 real-world asset integrations globally. That's massive, and their commitment extends beyond just enterprise solutions. Just recently, VeChain demonstrated its dedication to sustainability by organizing a cleaning exercise in Japan. This isn't just tech. It's a project with a conscience, building goodwill and demonstrating its values in the real world. So, while the short-term outlook might feel like a punch to the gut, it's crucial to remember the bigger picture with VeChain. This isn't just about a few cents here or there. It's about a fundamental technology poised to revolutionize industries. The bearish sentiment dominating the charts right now is a test, a crucible. Will VET hold its critical support? The market's answer is still unfolding, but if it does, if the long-term vision and these powerful catalysts kick in, then VeChain might just be ready for its next explosive move. The coming days will be critical.